Welcome back everybody, your typical bull here, and today we're going to be adding some indicators to our moving average support strategy for trend continuations. But before we get into that, please remember to like, subscribe, and comment. Your support really helps the channel grow. So first up, if everybody remembers our EMA strategy that we talked about in our last video, today we're going to be adding some indicators to that. If you missed that first video, you should see a link to it pop up here that you can go ahead and watch it. So just a quick recap, we're working on a trend continuation trading strategy here. What we're looking for is all of the EMAs to be in a row here. We have the 200, we have the 150, we have the 100, we have the 50, and we have the 20-day exponential moving averages. And we want to see all of those in a line. Let me just go ahead and open my pen here. So we have all of these in a line. And we're looking for bounces off of these areas when these are all in a line, like right here, except we wouldn't take that trade. We're looking for clean. There's a bounce off of the 50. There's a bounce off of the 50. See, this is what we're looking for. And these by themselves, they are high probability setups. As you can see, price bounces, price moves up, price bounces, price moves up. And we're just using our candlestick reversal patterns, which would be these candles here and these candles here. They're rejection candles off of these moving averages. So how can we make this a little bit more high probability? What we're going to add in is a stochastic, and we're going to add in the MACD. So the stochastic, the standard settings are 5, 3, and 3. We're going to leave those as they are. The MACD, we will change those settings. The default settings are 12, 26, and 9. We're going to change that to 40, 100, and 9. Okay, so let's talk about these indicators for just a second. So the stochastic here is an overbought and oversold momentum indicator, but you can also use it to find trends. As you can see, it's trending up here. You can use it for divergences, which would be if your price is making a higher high, but your stochastic is making a lower high, that would be considered a divergence. But specifically for this strategy, we're going to focus on just the overbought and oversold levels. So price is considered oversold if it's below this 20 line here, and price is considered overbought if it's above this 80 line here. And those are the two things we're going to be focusing on for this specific strategy. We'll get into divergences and things of that nature in a later video, but for now we're going to keep this very basic. Oversold is at 20, this line here, and overbought is at 80, this line here. So the MACD is this here. This is a momentum indicator. We've changed our settings. The only thing we're going to be looking for on this is cross downs into bearish and cross ups into bullish. You can see here when you get that cross down, this histogram, it turns red. This portion here is called the histogram, and when it crosses up, this histogram is green. You can set this MACD up to where it doesn't have this. I personally like leaving it on there. So we're looking for just the two things here, the cross down and the cross up. All right, so remember we have our moving averages, and we're looking for them to be in a line, the 200, the 150, the 100, the 50, and the 20. And what we're looking for specifically is these to be in a line, price to come down, if you remember, we want price to come down from its trend and to reject off of one of these moving averages. The 50, the 150, and the 100 are the main ones we're going to be looking at. The 20 is really just for short-term stuff, so we're just using that to make sure that they're all in a line and our trend is up. So we want the long-term trend to be up, we want the middle term trend to be up, which should be this 150, and the 100, and we want the short-term trend as well. So we want all trends to be up. So now we're gonna scroll through here. We're looking at Apple on a 1-day chart. We're gonna scroll through here and we're gonna start finding some bounces off of these moving averages. See here, we've got price bouncing off of this 100 day moving average. But what we want to see when that price is bouncing, here we want to see straight down, we want to see our stochastic under 30 for this specific strategy. It doesn't have to be all the way under 20, but we want to see it under 30, and we want to make sure that our MACD has not recently crossed bearish within the last 3 or 4 candles. So let's count here. When did this MACD did cross bearish, but it's crossed bearish many candles ago, as you can see. So is our stochastic under 30 at this point? Our stochastic is under 30 at this point, so this would be considered a good trade based on this setup. So you would put a stop loss in here. You get a confirmation candle here, so you would buy in on top of that candle. So for these confirmation candles, so you get here, let me zoom in a bit and delete this stuff. See here, you're starting to see the bounce, but this next candle closes lower. What you want to see is a candle close higher than this rejection candle, and you don't get that until right here. So we would put a buy order on top of that candle. Our stop loss goes below. This is our stop loss here. There's our buy order. Our targets go roughly 2 times away. And then that trade gets, yeah, that trade would, I'm not positive if you would be stopped out. No, you would not get stopped out on those candles there. But so that trade would probably win right here, 39.34. Now we're scrolling through looking for some more bounces. Here, I guess you could consider this as a bounce, but your stochastic's over 30, so you can go on and skip right on past that one. Here we go. Price is bouncing off of this area. Stochastic's oversold. But price doesn't quite move down like we want to see and close and move down below that average and then reject. We want to see, remember, we want to see candles move down below the average and then candles move back up and reject from that area. And it's not quite doing that here, so we really want to take only the very highest probability setups. So we're still looking. Of course, if you had went ahead and taken that trade, it would have won also. But sometimes you're going to miss moves. So here, price is just right directly on the 50, and it does move below it just a touch there. And then you get a candle there that closes higher, so buys. That's a very small risk, but if you look down, you notice your stochastic is at 43, and your MACD has just recently, just yesterday, crossed bearish. So we're going to skip this trade. Here we are again. How many candles ago do we cross bearish? 1, 2, 3. You could possibly take this trade if you wanted to. See, Stochastic is oversold. MACD's bearish 1, 2, 3 candles ago, which is 3 days back, and price is making some bullish rejections off of 50. So let's just say that you did decide to take this trade. So this would be roughly your stop loss. This would be your buy, and this is roughly your take profit here. And I don't think these are moving properly. Let me just draw some horizontal lines here. Just boom. Okay. There. And profit targets would be about 2 times that, which is roughly here. So even if you did decide to take that trade, even though that MACD has crossed bearish 3 days ago, that would still very likely win on this day here. And this works, once again, remember, on any strategy, and it works in up or downtrends, except downtrends, which we'll look at here momentarily. As soon as I can find, let's go something different. Let's look at a different stock. Let's look at Mara here. Oh, cool. Very first thing we click on here is Mara, and it's a downtrend. You notice that your 200 is at the very top, then you have your 150, then you have your 100, then your 50, then your 20. So what we're looking for in downtrends is for the stochastic to be over 70, and we want to make sure that our MACD hasn't crossed bullish in the last several candles, and right here it does cross bullish, so we're not going to take that trade short. As you can see, let's go ahead and count our candles here. How many candles ago did we cross bullish? 1, 2, 3, 4, 5, 6. So we could actually take that trade if we wanted to. At our reversal candle, nope, because our stochastic is not quite where we want it to be. Here's another reversal pattern. Our stochastic crosses bullish plenty of candles ago, but we aren't quite rejecting like we would want to see off of this 100-day moving average. If it were me personally with a pattern that looked this good, if you remember from our candlestick lesson, this is a very high probability reversal pattern. So I would very likely go ahead and take this trade. Stop losses above this doji, entries here, and take profits would be about $1.40-ish would be my best guess. So, and right there, you hit those take profits. So now we're going to keep looking for our short setups, and nope, our 20 days back above our 50. Now we're back down into a downtrend, and as you can see here, there's another pattern. Price moves up, touches the 50, rejects. Stochastic is not quite where we want to see it. MACD, although the MACD does look good, the stochastic is not where we want to see it. Here we go. Price is rejecting off of the 100, but you don't quite get a confirmation candle before that crosses. So we're just going to look at a few more examples here. Let's go look at Piton, but let's move this into a 4-hour chart this time. So the rules are still the same on any time frame. solid downtrend. We're looking for bounces off of these moving averages. Okay, here we go. Here's a very nice rejection off of the 50. But if you notice here, see, you have your stochastic signal. Your MACD has not crossed bullish recently, but this is a pretty interesting setup. See, you get this bearish pin bar. This candle closes higher. This candle closes higher also. And then this candle also rejects off of this same moving average. So what you get essentially here is a tweezer top pattern. And then here you get your confirmation candle. So buy orders would go in just below, or sell orders, I'm sorry, just below that. And then stop losses here. And then 2 times that roughly, you'd hit that in the very same day. Okay, so that's going to pretty much cover it for this one. Now I feel like you guys have a very usable strategy, and I use this strategy quite often as trend continuations. So I hope this helps everybody out. Please remember to like, subscribe, and comment, and we will catch everybody in the next lesson. Oh, lordy mighty.